and bring in people's participation into this. So that is our mission, and vision is obviously, as I've said, it is to bring the quality assets and ultimately, get a good dividend yields, within this one. So our niche is to identify such potential in terms of location and in terms of potential, right? So this is the mission and vision of our platform, 22 Yards PropTech. Next. And what is fractional real estate, right? So we've been hearing these questions quite a lot, ever since, we have shared these presentations. We've been receiving, okay, fractional real estate, what exactly does that mean, right? So it means, a property is co-owned. So when it is co-owned along with the promoters, along with the people that you are not aware of, bringing them into one platform in a legalized entity, and then have everybody participate is called fractional real estate, right? So basically you'll be owning a fraction of the share, and then the purpose of this one is to raise funds, or basically the purpose of this one is to own the quality assets with a minimal investment as possible and enjoy a very decent returns. So that is the primary function of the fractional real estate. So again, you must have all heard about, owning a share in the capital markets. So think of this also in a similar fashion, but currently this is at a private placement level, where we will be privately owning the properties at a higher value, and eventually the goal is to get the public placement. All right, so I'd like to quickly go over our team, and also help you understand about our backgrounds. So Yashwant.
Yeah, good morning, everyone. Good evening to people in USA. I'm Yashwant. I have around 14 years of experience in real estate and construction and infrastructure sectors. I've been primarily into EPC business. We have been delivering solutions for buildings, transmission lines, solar power plants, and substations. And previously, we have done around 52 buildings in Amplify Infra, and we are currently doing around 10 projects in Hyderabad, including villa projects. And we have experience in building co-living projects and even hospitals and other buildings like that. And we have already done around 200 megawatt of solar power plants and 250 kilometer of transmission lines, high tension lines like 220 kV and above. And we have also done substations from 33 kV level to 220 kV level. And this is regarding my experience. And I have done my master's in NJIT, where I met with Vikas, where we are roommates. And after coming back to India, I've done my MBA in ISB, Indian School of Business, in 2019. Thank you. Over to you, Vikas.
I'm Venkat Vikas Varda. So in short, people call me Vikas. I'm a pharmacist by training, and then overall 14 years of experience working in the clinical trials industry for various, large and medium biotech companies and then pharma companies. So, I worked as a data management consultant and as well as the safety scientist consultant. So all through my life, major part of work is to evaluate the risk versus benefit profile of the drug. And then from there, I also had a brief stint in the IT industry, and then into this real estate in US along with my father. About 6 years we have been doing this fractional real estate or syndication, however way you want to call it. So currently, we get an asset base of over $50 million. So this includes both land banking and as well as the commercial assets such as strip centers and then the gas stations, right? So we own assets across 5 different states in US. So learning through that experience, we thought we would also bring in such kind of model in India, where it's very much in demand right now, and also need of the hour. So that's my experience. Next slide. So now, why hospitality sector in India, right? So we have given you a brief overview of our backgrounds and then all that stuff. So, why did we decide to get into the hospitality sector, right? So we have identified, 3 primary reasons for getting into hospitality sector. So one is the projected tourism growth, and the projected tourism growth is driven by the domestic demand. And based on our research, we say that in next 5 to 6 years, there will be over 24% annual growth, compounded annual growth rate in terms of the tourism. So in terms of travel that is being, this does not include the international tourism, international travel, but this is primarily from the domestic travel. So again, more number of travel that increases, which requires the hotels to be, to be able to be accommodated for such kind of people, right? And then economic impact and per capita income. So as you must have been hearing, and then a lot of people, do come here to India quite often, right? So, we've been talking about, the rise of wealth in India, right? So the per capita income is certainly rising. There is a lot of disposable wealth in the community. If not, the income levels are rising, and then the economy itself is moving from the savings economy to the spending economy. So as the spending economy is increasing, more and more such expenditure would go into your personal maintenance, and then increase of personal needs, and along with that your travel will raise, and then overall the quality of the travel will also increase. So the quality of travel, it could be people commuting through trains are now going by flights, and people who were staying in lodges now, looking for hotels, and people who are looking in 3-star hotels earlier now looking for 4-star and 5-star hotels. So this is a sector, which we have seen quite a bit of demand. And then also from the economic standpoint also, we have seen the per capita number of hotels, again India compared to the Western worlds, right? So now India is the 5th largest economy and soon to be 3rd largest economy. But when we compare the hotel sector particularly to the Western world, right now we are serving only 130 rooms for a million people. So 130 rooms for 10 lakh people. So which is very, very, very low, and there is a high demand in this particular sector. So again, so 183,000 hotels is identified, which might not accommodate the lodges or the smaller or older hotels. So this includes a decent section or a decent hotels, which is primarily aggregated from Oyo, Tribo. All these names are quite popular in India, which you also might have heard about, right? So, basing on these three factors, we have figured out that hospitality sector has a way to go. And again, a lot of this has been substantiated to us by the largest real estate consultancy companies such as CBRE, JLL, Savills, Knight Frank. So we have our friends working there, and our network is there. So through them, we have done extensive research for about past 1.5 years, and then figured out that this is an area where the supply is less and the demand is more, particularly in the 3-star and 4-star categories where there is a lot of growth. Hence, we chose hospitality sector. And I will reserve the renewable energy for our next project, but that's also a great place to be, which I would be very happy to share, but not at the moment. And then, so people who have gone through these slides, this is another question that we have got quite a bit. What is management contract, right? Now, so people who came here to India, you must have heard about this group of hotels called Lemon Tree. So which is quite popular here, especially in the budget and then the upper mid tier of the hotel industry. Lemon Tree is quite popular. So we are doing management contract with that. So now what does it mean exactly is it's a fee-based service. So they are experts in running the hotels. So in exchange of their time and efforts, we are paying them a certain service fees. So here in this case, we are paying them 7% as their service fees. So along with that service, we are also getting the brand name attached to that one. Along with the brand name, we also would be able to tap into their loyal customer base. So for people in US, you might have, or across the world, you might have heard about Marriott Bonvoy membership, right? So, it's an exclusive membership program where, you could collect the points and accumulate those points and use it for a discounted stay or a free stay. So similarly, Lemon Tree also runs a program called Smiley Program, which has 20 lakhs registered users. So 2 million registered users. So, we could tap in that potential as well. So again, in nutshell, management contract is the property that is run by the experts along with their brand name, and we would pay them the service fees. So it is not franchising, or neither the owners would be running it hands-on. And I'm happy to answer any particular questions regarding management contract at the end of the session. Lemon Tree Hotels, as I just mentioned, this is a quick data that I would like to go over. So they have about 10,000 rooms in operation currently, overall 100 and distributed in 104 hotels spread across 60 plus cities. And it's a public listed company. The revenues are about 1100 crores, and then the market cap is close to 11,000 crores. So this is also the fourth largest in the market cap in this particular domain, and it's a profitable company. So they have booked profits in the past couple of years, and prior to that, it was COVID, which we all are aware. And we have shared more details about Lemon Tree's economics and as well as the financials in our slides. Again, they also have experience running the business in 9 pilgrimage centers, but mostly in the northern and western part of the India. And they are also very keen on expanding it into the southern part of the India. So I would like Yashwant to take you over the location and also the other details about the project.
To add to it, primarily before finalizing Lemon Tree, we had done a lot of research in the background of this area in Shirdi. I mean, we wanted to have the best place in Shirdi. So we took this land just diagonally opposite to Sun and Sand. This is like 150 to 200 meters away from Sun and Sand, which is like the 4-star hotel of Shirdi. It was built in 1997. It has around close to 95 rooms, and it is one of the primary hotels in Shirdi. And this lane where we are, this diagonal plot that you can see, 1422 square yards. It's a northeast extended bit. It's good for as per Vastu also. And it has 2 roads on both the sides. And we are building the building as per the norms of Nagarpalika in Shirdi. We are leaving extra setbacks also. And as per the norms, we are getting a cellar plus G plus 5 to build 50 rooms in this building. Like we'll be building 50 rooms along with a banquet, and even one restaurant in the ground floor and a restaurant in the rooftop. So the room size also will be around 250 square feet. I will be explaining more about that. But before selecting Lemon Tree, we have also spoke to other hotel brands also. We spoke to Sarovar, we spoke to Fern, we spoke to even Park Hotels and Ginger and 4 other brands. So, but we have finalized Lemon Tree because of the terms that they were offering us in terms of the, not in terms of financials only, but in terms of the occupancy levels that they're promising, as well as the average room rent they're promising. So that's why we have chosen Lemon Tree ahead of all these other hotels that we were talking to. This location is also like 700 meters from the temple. It's walkable distance in a straight road. You can down the lane if you go, you will reach the temple. And it is around 14 kilometers from the airport and around 3 kilometers from the railway station. Because right now there's a lot of connectivity that is coming up in the airport also. We have got more number of flights that are coming up in the airport. We'll cover this in the next slides. So these are the demand generators. Right now the airport is handling around 12 flights from the major cities in India, but night landing works are going on in the airport. Most probably in the quarter, maybe 3 to 4 months, it will be completed, and we'll be having more number of flights from major cities in India and even tier 2 cities also. So we expect the current airport has a handling capacity of around 3 to 4,000 passengers per day, and it's going to increase also because it's given international status also. And even there is a train connecting from Mumbai. It's a daily Vande Bharat from Mumbai. It comes in the morning and again goes back in the evening. But the timings of the train is that it starts at 6 a.m. in Mumbai and 6:20 a.m. and comes to Shirdi around 12:30. So many travelers who come there have to stay overnight and then only take a train back to Mumbai in the next day. So that is how the current market is. And even there are 2 highways, Samriddhi Marg highway from Mumbai that's being expanded, and the connectivity with Mumbai is being, the time to reach Mumbai is also getting shorter, but currently it's around 6 hours. And even Surat Chennai highway is also, work is going on. The proposal to make Shirdi a district also is happening. With the current government coming in, new government, I think it will be pushed forward. In another 1 year, we'll be seeing Shirdi as a district, and a lot more developments are going to come up. A 700-acre industrial development is happening near the Shirdi. It's around 14 kilometers from the temple. They're building a 700-acre industrial complex, which will house many industries. So there'll be a lot of corporate events also that's going to happen in Shirdi. Right now also they're happening. Pharma companies come here and conduct events in Shirdi. So that's why there's a need for a banquet hall also in the property. That's why, along with marriages also. Yeah, thanks.
I'd also like to mention a couple points about the proposal of Shirdi District and also Maharashtra Industrial Development Corporation. So again, MIDC is currently in place where the works are going on, and also the buzz about Shirdi becoming a district. So how does it matter to us? Shirdi is largely a floating population, right? So there is no all the people that stay are currently working either for the temple or the workforce that is servicing the hospitality industry. So that's the current population of Shirdi. But once the Shirdi town becomes a district headquarters, then we will see a lot of people staying in the city or staying in the town, because the administrative buildings are going to come up, the district courts are going to come up. So there will be a lot of economic activities that is going to come up. So now how does it signify for us is the underlying asset, which is the land, it is bound to go up because the population is going to increase. And likewise, if MIDC is fully functional, especially in the 700-acre plot, multiple industries are coming up, then also that workforce is also going to play a major role. So more number of colonies going to come up. So obviously the land rates are going to go up. Again, this is proposal, and the current MLA of Shirdi town or Shirdi constituency is a revenue minister also. So he is an incumbent revenue minister. So there is a high potential for this to become a Shirdi district.
So, as we already told you earlier, that before finalizing Lemon Tree, we have spoke to 4 other chains, 4 to 5 chains, and Lemon Tree is one of the largest chains in India. They own more than 100 hotels, and it's the fourth largest in terms of market cap and one of the fastest growing chains in India. So if you look at this property, the property will be having around 50 rooms and a banquet hall of the capacity of 180 to 200 people to accommodate 180 to 200 people. And also there'll be a restaurant on the ground floor and a rooftop, and we are going to have a swimming pool also, along with car parking and building according to fire and safety norms and all the norms that are going to be required. And Shirdi is primarily a temple town, and it has a floating population. On weekdays, 50,000 people come, and weekends is very rush, and it's around 1 lakh. And in times of holidays or major festivals, it goes up to around 2 lakh, so 2 lakh 50,000 also. So the asset that we are building here is a 30,000 square feet 3-star hotel, and it will be built according to the specification of Lemon Tree, and the design and architecture also here is being done according to the specifications that Lemon Tree requires, and Lemon Tree has appointed an architect, referred an architect to us, and Rahim is the architect that is going to work with this building. And we have also hired structural and MEP consultant Zaki Associates from Hyderabad. They're one of the leading consultants in India. So these two people have been onboarded and they're working on the designs. And the asset right now is being offered at around 9,100 rupees per square feet. When you look at the 27.5 crores is the cost of the asset, and around 30,000 square feet will be built, close to 30,000 square feet. So around 9,100 rupees is the right now the cost. If you look at real estate, 9,100 rupees, you're getting a fully furnished hotel with all the drapes and everything, furniture and everything put together, and it's a fully functional hotel run by a premium brand like Lemon Tree. At 9,100 rupees per square feet, you're getting a premium asset that is a rental yielding asset, and it has a very good scope for capital appreciation once it opens also. Because right now the offering is 27.5 crores is the investment size, and 110 shares are being offered. 10% will be held by the company itself, parent company 22 Yards PropTech, and remaining 90% the shares are being offered to retail investors. And we have got a very good interest in the last 1 week that we have launched this property. Last Saturday we have launched this property, and in this 1 week we have got more than 300 people talking to us and in various platforms. So still we are yet to market it to the larger sections, but this is only internal groups that we have marketed. There's a lot of interest that has come in from internal groups, from NRIs and as well as Indian groups also, like ISB group and all these people that we have, old alumni and all these people. So the dividend here is around 8 to 12% depending on occupancy. The base level 8% comes at around 55% occupancy, and at a ARR of 4,000 rupees that I'll explain the next slide. And 8% will translate to around 20,000 rupees per month, and 12% will translate to 29,000 rupees per month. And right now we expect the hotel cost around 27.5 crores. But if you want to buy a similar property in Shirdi, we have seen there's no apple to apple comparison, because there are very less 3-star hotels in Shirdi. There are around 4 3-star hotels in Shirdi, 3 on the same lane that we are on the there's a primary road of Shirdi, and remaining hotels, if you see, there's one 3 kilometers away. So all these hotels running at an occupancy level of around 75% on an average throughout the year. So we expect our occupancy level also to reach 75% in a year or two, most probably within a year. So the contract also with Lemon Tree is for 20 years on a performance basis, and it can be extended by another 10 years on mutual consent. And we are proposing a lock-in period of around 24 months for the investors so that they can see the capital appreciation, because right now the asset is 27.5 crores. But once we complete the asset in 2 years time and it's operational by end of October 2026, it will be at least valued at 35 to 36 crores. That means you are seeing a capital appreciation of around 15 to 20% per year in the next 2 years. So that's why we are keeping a lock-in period of 2 years so that the investors can get appreciation benefit if they want to exit after 2 years. So total of 110 shares are there, out of which around 30 shares are already filled, and that's interest for around 30 more shares, and 10 shares are being filled with the company. So earlier I was telling you regarding the average room rent, because we have considered around 55% occupancy to 60%, and right now if you see the first year we will be stabilizing at around 65%. These projections have been shared by Lemon Tree. Basically, they've been this is a conservative estimate that we wanted, because we don't want to have a very optimistic estimate. So we took a very conservative case that they've given and put it over here. And what we expect is 4,000 rupees excluding GST. This price is excluding GST will be the average room rent, and 50 rooms at an average occupancy of 65% will generate a revenue of around 4.73 crore in the first year. And the expectation, because we have a banquet hall in Shirdi, there are a lot of people from Maharashtra coming in and getting married over there. So a 200 capacity banquet hall is required, along with dining facility and kitchen. So we are going to build that in this facility, because Lemon Tree has also been very insistent on having a banquet hall. We wanted to have extra rooms, but they said the banquet hall will give us more revenue as we go forward, and as Shirdi develops into a district, more number of events will be happening in Shirdi also. So that way, right now we are expecting around 10% revenue from the banquet hall, but eventually that will go up to 30% in the next 4 to 5 years. So after taking out the expenditure of around 50% and Lemon Tree fees of around 7% also I'll explain the split. 4% is a fixed fee for marketing and managing the property that they'll be taking up, and 3% is a variable fee. That's depending on the net profit that we made. That means if the 2.3 crore is around, if you say around 45% of the revenue that we are making, 40 to 45%. If they reach above 40% of gross profit only, then we'll be paying them 3% of the gross profit. Otherwise, we will be paying even lesser in terms of the gross profit is lesser. But we expect the gross profit to be around anywhere between 35 to 45%. So that's why we have put the highest fees over here, and that is how Lemon Tree operates. And the expenditure also is for all the people, like the chef, manager, and the people who will be employed over there. Around 45 people who are going to be employed in this hotel, and average cost that they've taken is around 20,000 rupees per person salary. In hierarchy level, it will be different, but the average is around 20,000 rupees. So if you see the occupancy level, we are expecting it to be stabilized to around 75% in the next 2 years, and then the revenue increases drastically. So then you will be making a better return. There's no upside limit to the return over here. That's the beauty of this hotel property. So because the return is not capped at the top, it's not like fixed return like an office, like you get 8% through the year, but this can start at 8% and go up beyond 14% also, depending on the average room rent increase and occupancy level increase, because there'll be at least 5 to 10% room rent increase as we grow over year on year, at least because of inflation.
Also, I just wanted to quickly take over a particular point here. So the Lemon Tree fees of 7%, as Yashwant had mentioned. So 4.5 is the base fee, and then 2.5 is the variable. So even that 4.5, we are not obligated to pay. As in, it's not a fixed cost. So basically, as and when the revenue is coming in, then we are supposed to pay them from there, right? So think of Lemon Tree as an employee of the organization. So it's pretty much that. So, if you have to hire a general manager or a chef, how you would have to pay them a certain cost. So Lemon Tree also comes into that place where, you would have to pay them that service fees. So with business, their fees also will come, right? So without business, their fees will not be there. And then these are all the linear projections in this particular table.
These projections that we have taken a base rate of around 4,000 rupees, and it can go up to 5,500. Right now, if you see, currently, if you want to book a room in Sun and Sand in Shirdi, in December, it's costing around 11 to 12,000 rupees per night. In January, it is costing around 8 to 9,000 rupees per night in Sun and Sand. So if there are months, there will be peaks, like seasonal months, like from October to March is the best months for having this good occupancy levels and good rates. So the average can be beyond 4,500 rupees ARR also. And occupancy level also at this point of time, it will be very high. And even during weekends and special days like Sankranti and Dashara, the occupancy levels are higher. So the base occupancy that we are considering is around 55%, the worst case scenario, and around 4,000 rupees will be the average room rent. So if you start there, it's around 8%. But if the best case will settle around, our expectation is around 14%. If you see a 75% at around 4,500 rupees, also it will be around 14 to 15%, 70% occupancy with ARR of 4,500 rupees. It will be around 14%. That's what is the expectation. And it's been backed by Lemon Tree's data. We are not talking this from just any authentic data given by Lemon Tree after a lot of research from their algorithms and their own software that they run. So these data have been authenticated by them. So they expect average occupancy of around 75%. So this is about the average rental. Because we want to add anything?
Yes. So also the primary purpose of this table is because since the dividends will be paid out on a quarterly basis, so this will give a sort of a projection, right? So particularly, as Yashwant had mentioned, the peak season is from October to January. Is October to January mid till Sankranti time is a very peak season, and from January 15 to March is also a good season, right? So in those quarters, we can expect a higher rate of return. And then during the lean season, peak summer is sort of a lean season where we may see the returns go down during that period. And then monsoon is also another season where the returns can be expected less. So on an average, upon discussing with the other hotels, what they had, other hotels in Shirdi area, what they had said is, so they have divided 365 days into 4 parts, right? So 90 days taken weekends and then holidays and then the special days, right? So they've taken 90 days into consideration. So 90 days is the super occupancy level, right? They're super busy. And then rest 90 days, it's fairly busy. It could be summer holidays, or it could be, festivals, particularly Navratri, and then Ram Navami time, Guru Purnima. So these are the times where it is pretty busy, right? So that 90 days they have kept it as a fairly busy season, and another 90 days during summer season. Again, it's kids' holidays time. People also come, but due to heat, they said it would be moderate occupancy. And then during monsoon, particularly in June, July time, is when we will see a flat, right? So that will be the lean season. So they've divided the year into 4 parts, and then they said the first about 180 days would be a fairly busy, and the next 180 days would be moderately busy. So based on that, we have projected this average rental rate here. Again, 4,000 is an average rental rate because on Sundays and Saturdays and Fridays, you could sell, or Thursdays perhaps here, you could sell it at a higher cost. And then Tuesdays, Mondays, you might sell it at 2,800, 3,200, things like that. So the average rate is 4,000. And again, during a holiday week, right? So the season that we are in, which is a super busy season particularly. So we will see anywhere between 5,000 to 5,500 as an average. So again, depending on the season, you could expect to see the returns accordingly. So on the whole, we have done an average base case as 8%, and then upper case as, again, there is no upper limit to that one. So the base case, what we could say is 8%.
So, I mean, the payment schedule also has been linked to construction. So, we didn't want to burden the customer by taking a one-time payment. So, we have done a 4-part payment depending on the construction progress. Basically, the payment comes in before the construction starts at each stage, but we have primarily divided it as 4 stages so that it'll be easier and spread over 1 year. Like if you start from January 2025, the last payment comes in on January 2026. So this schedule has been, made to accommodate larger number of investors. So the first payment of around 12.5 lakhs is due by 15 January 2025. We have already secured the land and permissions are underway and drawings, architectural drawings and permission drawings are happening right now. We have identified the architect and even the structural and MEP agencies, and we have given work orders to them. So the Lemon Tree contract is already done with Lemon Tree. So these things are already in place. The first payment will go towards the land, permissions, architecture, building, the basement of the building and cellar and works, foundation works. And the second payment, which is due in May 2025, it will be taking care of all the slabs and the brickwork and the plastering. And the next payment, which is due in September 2026, will be taking care of the electrical, plumbing, other fitting works like painting and all these works. And the last payment will be towards interiors, like in before 15 January of 2026, you'll be paying the last payment of 4.5 lakhs. And this payment would be used for all the interior works, HVAC, generators, lifts, and all these miscellaneous works that has to be completed before the start of the project. Basically, our idea is to start the project construction by end of February 2025 by getting the permissions and complete it within 1.5 years with a buffer by September 2026 and have the dry run of the hotel in October and start the operations in end of October in 2026. So that you can see the revenue, first quarter revenue by in the 2027 January, you'll be seeing the first 3 months of revenue that will be hitting your account. So, I mean, why we have proposed this kind of a structure, I'll be going into much detail about it, because we wanted to have a asset that will be generating a good income and that will be tax beneficial for the investors also, because we wanted the income to be passed on, a larger part of the income to be passed on with lower amount of taxes to the investors. So we have taken a private limited company. It will be an SPV. The SPV, we will be owning the asset, and the entire asset is being under the name of this SPV called 22 Yaar Shirdi Private Limited. So to ensure SPVs are, will be owning a single entity in this SPV. That's this hotel only will be owned by this SPV. So this SPV will be giving you shares in this SPV. So you will become co-owners in this SPV. So there will be 2 components in the how you'll own this SPV. One will be through equity shares and one will be through compulsory convertible debentures. So we'll be issuing around 1 share and around 4 debentures for each person. Ratio of that for the 25 lakh value. So that why we have taken debentures is because debt can be capitalized. I mean, we can take the debt and capitalize the interest portion of it. So that's why we wanted to have debt on the books, so that whatever payments we pay to the debt, it's tax free. I mean, it can be passed on to the investors without paying the minimum tax that we have to pay for the corporate taxation in India. So that's why we have we'll be putting a coupon rate of around 6 to 7%. This is being decided during the next week. We'll let you know the coupon rate. And above the coupon rate, whatever spread is there, around, if you go to 14%, the next 6-7% will be paid after the tax, basically. So that will be paid as a share, as per your shareholding. This also will be paid as per your debentures. Basically, a 25 lakh share will be split into some part of equity, like 5 lakhs of equity and 20 lakhs of debentures, for example. This kind of a tax structure will have minimize the tax liability for the company and will increase the returns for the investors. So that's why we are proposing this kind of a tax structure. Along with this, we'll be giving this all legally into a demat account. So all these instruments that we are talking about, equity and convertible debentures, will be given to you through a demat account. If there is if you guys don't have a demat account, we'll help you open it also in India. It's pretty much straightforward process these days. So it will be helping you open those demat accounts also. So all the distribution of the revenues and the profits will be done directly to your bank account, whichever are linked with the company. We'll be explaining more about how the process of taking back the money will happen. So an investment in the next slides. We'll go through that in the next slides. So why these ECDs will be converted into this debt will be converted into equity shares at the time of SM REIT listing. These is one of the exit options that we will be going more elaborately in the next slide. So SM REIT is a small and medium scale real estate investment trust which should be valued at around 50 crores. Asset should be valued at around 50 crores to be listed in the SM REIT. So in the long term, this all the shares would be all the debt also will be converted to equity before going into a REIT.
So our exit strategy is getting into SM REIT. So basically listing it into the market by the IPO route, right? So again, so if you have to sell it to private equity or to any private parties, right? So automatically when we sell the shares, then this would this compulsory convertible debentures would become the equity, right? So we have provided this convertible debentures only for the tax benefit purposes, right? So otherwise your stake in the company will be as intact as your equity shareholder. And we'll take any further questions also. We will explain you during the Q&A session.
The ownership is clearly established. So, you will be getting the shares in your demat account, and it's, the ownership will be very clearly established for every share. So it won't be a problem. It's more legal to do it this way. So we have 4 exit options that we'll be availing in the future. Based on all the investors' support, we'll be availing one of these exit options. So primarily our motto is, our goal is to build around 500 rooms. Around 50 hotels. 10 hotels in the next 5 years. We have 500 rooms, so in the next 5 years. So and list them in a SM REIT, so that we'll have a better exit option, and liquidity also can be provided to the customers, investors at a very good rate. So small and medium scale REITs, so there are 3 conditions that it has to satisfy if you have to list it in a REIT. Basically, a REIT, the value of the asset should be around 50 crores, and 95% of the income should be distributed as dividend to the investors, and 90% of the assets should have been completed in that REIT and should be income generating. So these are the 3 conditions that we have to satisfy. Right now, after completion of this property, it will be valued at 36 crores or 40 crores in the next 2 to 3 years. But we expect to build more hotels as per our vision, and one more property might be clubbed with this, and will be put onto an SM REIT, so that we can have the exit options. The current SM REIT right now in India, it's very new concept. One SM REIT has been listed 10 days ago. It has been done by a company called Property Share. It's an office property that they have listed in Bangalore, and within 1.5 days the subscription has happened, and they listed the share at 10 lakhs per unit. But right now it's trading about 10.4 lakhs per unit, and the peak of the 10 days has been around 10.5 lakhs per unit. So we expect many more SM REITs to come into the market because many people who have started fractional real estate 5 years ago have a good number of properties that have to be put onto these REITs. By the time we come with an SM REIT around 3 years down the lane, we expect at least 40 to 50 properties to be listed or more to be listed in this SM REITs in the next 3 years. So this will be the benefit when we go to a SM REIT at that point of time. And the other option is, if you have heard of Shami Hotels, they have done a similar model. They have collated a large number of hotels by greenfield or brownfield projects also. They have acquired large number of hotels or built large number of hotels also, and they put them as a portfolio. Basically around 60 hotels is what they own as of now. They have put it as a portfolio and listed very recently as an IPO. So that also gives a very good value to the investors, because you are talking about good operating properties and future potential. So an IPO will give more value to customers for their shares also, for the investors. So we have plans to take it in such a model, but it will all depend on the investor interest. If the investors agree to go for an IPO, we'll go for an IPO. Otherwise, we'll go for an SM REIT listing. So it'll depend on getting the quorum approval above 75% for whichever decision we are going to take regarding the company. So also there is an option, it's an easier and straightforward option, a traditional option, that asset sale. If you want to sell, I mean, if some hotelier wants to buy our property, or a chain wants to buy our property, we can directly sell the property after like 4 or 5 years of running the property and stabilizing the revenues. At that time, you'll be getting a very good valuation based on your bottom line and the top line also. So, and as well as the cap depreciation of the property also you can realize because of the land that is available, 1422 square yards that is available, and the built-up structure along with the revenue generating asset. So, and prior to this, before this 3 years, if you want to exit, we are going to create a secondary market in our platform. So it will be, apart from this 110 investors that you can trade with, there'll be more than 1,000 investors or interested investors on the platform who are showing interest to join the platform. So you can sell your shares at a predetermined valuation. Basically, every 6 months, we are going to release a valuation document. That will be through a certified valuer, a reputed certified valuer. So you'll be getting your valuation report every 6 months. Based on that valuation, you can trade in the secondary market on the platform, or you can also bring someone into the platform if you are getting a better rate outside the platform also. So this arrangement will be arranged by the 22 yards for you guys.
Since most of the participants here are NRIs, so we'd like to quickly explain you through the model. I'm sure this must be new for many. If not, also we would like to quickly take you through that one, right? So this is an INR to INR investment, right? So the investment we assume to be flowing in through your NRO account, right? And then what happens with NRO account is, as we have previously mentioned in the structure, okay, again, just for explanation's sake, which we will provide you very detailed in the agreement document of how this works, but just for the discussion purposes, right? So let's say if you make a 1 lakh rupees as dividend, right, and assuming 8% is the return, so we have said that 6% of that income will be given through the debt instrument called CCD, right? So compulsory convertible debenture. So on that 6%, you would not attract any tax. Particularly, you would not attract any tax deducted at the source. So this is a term that's popular in India. We'll also share some details, for educational purposes, right? So that 6% will be given to you absolute, and then the balance of 2%, assuming the returns are only 8%, right? So the balance of 2% will attract about 10% to 15% of TDS, depending upon the DTA agreement of the particular country. So assuming most of the participants here are from US, then it is somewhere around 10% TDS. TDS is what we are considering, right? So basically, on 1 lakh rupees, 6,000 rupees will be given absolute. 2,000 rupees, you will see a 10% tax deduction. So that is 200 rupees will be deducted at the source, and then rest 1,800 will be passed on to you. So the net income that you would get is 7,800 rupees. Again, don't take these values literally. This is just for an example sake, right? And the TDS can also be claimed at the end of the year. Okay, so we, if you're onboarded, then we'll also have the panel of chartered accountants, and then we are also working with ICICI and HDFC bankers, to take you through. If you do not have any NRO accounts, we'll help you open up the NRO account. We'll also help you open up the DMAT accounts, and also we'll also conduct some educational programs in order for you to understand this process thoroughly, right? So the first one is the dividends will be, so the investment will flow in from the NRO account, and the dividends will also be passed on to your NRO account, right? Now, how would you repatriate the funds from your NRO account to back to your US account, right? So you have, it's not necessary that you would always have to repatriate. You can use that funds in India itself if you wish to. If not, if you would like to repatriate, at least for US, you can repatriate 1 million USD in a given year, right? So now that NRO to NRE repatriation will happen based upon, so you would have to require to submit form 15CA, 15CB. Again, this might look all convoluted, so don't worry. We will have the chartered accountants, give you the chartered accounting company that we are working with. They will provide you this form 15CA and 15CB, so that you would have to give it to the banker. Again, banker is also somebody who is on board with us, right? So once you submit that one, the funds from NRO account will be taken to the NRE account, and from NRE account, you can repatriate that at your convenience whenever it is required, right? So again, so for people who are not familiar about this process, so who have done that one, again, you must be very, very familiar about this one. And for people, this is new, we will do a thorough webinar taking through all these things in detail. So I would like to just quickly go over the exit options once, since most of the people here are from US. Go back, please. Yeah, here, right? So the exit options of 1 and 2, right? So so for people who are equity market savvy, right? So you would have heard about this word REIT, quite common, traded in our New York Stock Exchange and as well as in the Nasdaq, primarily in the NYSE. There are a lot of REIT funds that are there, right? So our intention. So overall, there are 4 big REITs in India, right? There are only 4 big REITs, and one SM REIT is there. So that there is a huge vacuum in that REIT space. So government is encouraging the real estate companies to get into the REIT space as much as possible, primarily because they wanted to see a larger public participation in this particular sector. As the real estate costs in India are going higher up, the only way to have that sustainable is through this REIT model. Okay, so quick comparison. So US has about 150 REITs. No, actually perhaps more than that. So Singapore, being a city state, they have 40 REITs. UK, again, being a small country with a small population compared to India, they have about 50 REITs, right? So all the developed economies, any country that you take, the number of REITs that were floated there is much higher, right? Compared to the population and compared to the economy in India, we have very, very less. 4 is pretty much negligible, right? So this space is where the government is heavily focusing on. Okay, hence for us to take to this medium would be fairly, I would not say simple, but it is fairly possible to take us through this route. And also initial public offering, we will also share you a couple links. So the third largest market cap in India is Chalet Group, which is owned by Raheja, right? So what they do is it's a conglomerate. So they have added only 6 properties, right? So I assume most of you are from Hyderabad here. So you must have heard about Westin in Mindspace, Madhapur, right? So that property is owned by the Raheja Group, which is also part of this Chalet Group, right? So it could be from JW Marriott, it could be from Hilton, Hyatt. So all these assets that they own, they put it into one company, and they've initiated this initial public offering, right? Similarly, there is also another company where we are closely following, which is Shami Group, which they have listed into public just last year. So again, they own about 10 hotels, again all different hotels, right? So they have franchises of Marriott, Hilton, and some Taj Group, right? So they have a mix of all the hotels, and they have floated into an IPO market. So even for us, that's our way out as well. It's not that we'll be working through Lemon Tree only. So we are also working with the other the operators. We have talked to Taj, Sarovar, Park, to name a few, right? So again, to combine it into one asset, put it under one platform, and then float it into IPO is also a possible scenario. So 2 advantages of that one. So one, we'll get a better returns if you put it into the IPO market, because the valuation will be higher. Number one. And number two, so investors, if they wish not to sell their portion once we go to IPO, then there is no concept of capital gains, right? Even if you wish to sell the shares, you know, immediately if you purchase any other shares, then again, you will not attract the capital gain taxes. So there is a larger flexibility if we take it to option 1 and 2. And option 3 and 4, it is anyways there as a standby. If you have to sell it, if 1 and 2 is not happening, then 3 and 4 is anyways there, right? So 4 is an option which will be there anyways, secondary market. So what we are trying to do is, we are trying to promote the brand, and we are also trying to promote this concept of fractional real estate as much as possible. So we are creating that larger base. So in next 2 years, 2 years, our goal is to have at least 5,000 users participating with us. Either they could invest, or they can stay as a standby, so that we are creating the market for ourselves to sell these shares, right? So again, these are all the exit options, but again, we will open up for the Q&A and answer your questions in particular.
You can either use the text box, or you can, we'll unmute you. You can ask questions. We'll answer all the questions.
Yes.
I have one question. Can you hear me?
Yes.
Yeah. So can you just offer a little bit more in-depth insights on that convertible debentures and the tax implications?
Got it.
The tax implications, not necessarily the bad way, but the tax advantages and whatnot, right?
Sure. I will do. So basically, what we are doing here is convertible debentures are like shares only that will be converted at a later point of time. I mean, you will not be you'll be holding a debt at a coupon rate. Basically, right now we are targeting a coupon rate around 6%. Basically, because the minimum return is around 8%, we are keeping the coupon rate at 6%. But this can be increased at any point in the time. If the returns are stabilized and more than 14 or 12%, then we can increase the coupon rate also. So why we are doing this is because on a company level, we can capitalize the interest that we are paying for the debt. So we can if you take EBIT and PAT, between EBIT and PAT, we can capitalize the interest part, so that we can reduce the profit that we are showing in the company. It's legally, a good way to do it, because we are allocating you convertible debentures. These are listed on the in DMAT form in the NSDL. So it's a legal way to do it, and you'll be reducing. Say if you're paying, say you're earning 1 crore as profit at EBIT, you have to pay a tax of around 25% according to Company Act. But right now you'll be deducting the 60% or 70% of as a debt payment, and you'll be paying tax over the 20-25% that you'll be showing as profit. So in this way, you're maximizing your tax benefit as well for the company as well as for the investors. So the return is being maximized. That's why we are taking this route, and this is being done by all the fractional companies in India right now.
Okay, so from what I could understand, because by no means I'm not an expert in accounting, but should I interpret that this approach is a tax deferred approach,
not
or tax free?
It's a straightforward approach. Basically, you're taking out the interest payments that you're making for the debt, and you'll be paying taxes on the profit that you're having. So we are splitting the distribution into two parts. One is 6% coupon rate, and the other is the upside. Basically, it can be from 8% to 14%, whatever the difference. We are splitting into two parts. That's the only thing we are doing here. Here, we are not trying to defer any taxes. It will be closed year on year. The year taxation will be closed for that year, and we'll move on to the next year, basically.
I think, Yashwant, the question is more from an investor perspective, right? So basically what they're trying to ask is that 6% on dividend that they are going to make, do they have to pay the income tax on that 6%?
No, we are paying that income tax ahead in the company itself and giving them the return. So they need not pay tax on again that.
Okay, so that 6% is absolute.
Yeah.
Yes.
So, but
Oh,
when we are
got
filing
it.
a personal income tax, when we file a personal income tax, do we need to worry about it then? It's coming as an income to us.
Yeah, I mean, based on, I mean, we'll be giving you this tax forms which are required as per the NRIs what we have to give. So these tax forms will be given, and I mean, this has to be reported as income only. Definitely, you'll be
Right.
reporting as
Okay.
income.
So we'll pay the personal tax
Yeah,
when we file our taxes.
yeah,
Got
So
it.
you
depending
have
on
to
your tax
put
rate.
that as your income. Yes.
Yep. Okay. Thank you.
So there are few
A few
questions. Now
questions.
we'll go from the first one.
Yeah.
Any anticipated corpus funds collection from shareholder after initial funding per share?
Yeah, basically, this 25 lakhs is all inclusive, and we are keeping I mean, 50 lakh corpus as, I mean, reserve fund for the operation of the hotel. I mean, we'll be putting, if any shortfall comes in the first few months, this shortfall will be adjusted from this 50 lakhs, and it will be like a FD kind of a thing. So it will be readjusted back. That is what, if I understand the question correctly. And we'll not be taking any other collection apart from this 25 lakhs. All this 25 lakhs is all inclusive. Then you'll not be funding anything else apart from this 25 lakhs for a corpus fund or anything like that.
And then the next question is there any way that we can increase the number of shares so it will decrease the fund value to 25 lakhs? So I think, 25 lakhs is an optimal figure from our research. So we deliberately didn't want to go below 25 lakhs. But in order to make an accommodation, we have split the payments into 4 installments, as which we have gone through before. So there is flexibility for the investors, and not just the flexibility that you could pay as per the progress of the property. So to answer the question, as of now, at least for this venture, now we don't anticipate to go below 25 lakhs as the face value.
Because you'll be seeing decent returns if you invest 25 lakhs, and as well as the number of investors also can be limited to 110 people in this SPV. So it will be much more easier to manage and distribute this value also, and good returns can be seen on a 20, because 20,000 minimum you'll be getting as a rental income. So that's why we have put 25 lakhs as a minimum ticket size as of now.
And also to add to another point, again, it's a long shot, but so in India, there is 2 types of placements, right? So you can solicit funds from public in 2 different ways. One is the private placement, which we are trying to do through private limited company, and then other one is a public placement, so where you raise funds from the public markets, right, or from the equity markets. So the caveat here is, for the private placements, you could have only 200 members, right? So we have decided that 25 lakhs because this property is valued at 27.5 crores. But tomorrow the other property that we may come up with, can be valued at 50 crores as an initial offering or more, right? So we wanted to keep that 25 lakhs as a flat rate for all the projects, so that we can keep it under 200 people in the private placement. So that's also one of the thought that we had. Hence, for that purposes, at least for this one, we do not intend to go below 25 lakhs. So next question is, okay, you mentioned 10% belongs to 22 yards and rest giving out as fractional investment. That's 110 units. Does that mean 110 units include the 10% or the 10%? No. So basically, our 10% is within 110. So in other words, so the 9 shares, so basically 9 shares are us, and then the number of shares that is available in the market is technically 101. So out of that 10%, majority of that has been already invested, and some we have reserved in the parent company. So the equity is right there. Next question: will we have to file up FBAR when filing USA taxes? FBAR.
This is when you have a foreign bank account, you have to file the FBAR report, right? Foreign bank asset report or something it's called, which you have to file along with your tax. So because there'll be Indian account then, right? The NRO account will be Indian account.
Absolutely. So
Right?
yes, absolutely. Any income that you are earning overseas, right? So overseas meaning outside of US, if you're from US, right?
Yeah.
So you would have to declare that.
I think you have to declare only if it's more than 10 lakhs, any period of time in the
$10,000?
bank account. 10 lakhs
$10,000.
rupees. No, 10 lakh rupees. Or
No, no,
$10,000, I guess. Yeah, I
IRS
think
requirement
$10,000.
is
You're right.
$10,000.
You're right.
Combine
Yeah.
all the accounts. So if you have others, combine all the accounts. That's what I want to confirm because it's a bank account. So you have to file an APR if it is about 10,000 for everything.
Right. Right.
And we will also get more details on that one, more specifics into that part. So we will take that as a FAQ. So for US investors, do we have to report this IRS every year? Do we receive any tax form? Also, do we have to pay any taxes here in US for capital gains dividends received in the NRO account? Yes, that's exactly what we have covered. So again, there is this condition called DTA, dual tax agreement. But yeah, so as part of that one, so any taxes that you have paid at the source country, which is India in this case, right? Only the differential amount is what you would have to pay for. And if you have already paid extra, then you don't have to pay. So that's the agreement, dual tax treaty agreement that we have in place between US and India. And we also have the similar treaties with most of the other European nations and as well as the Middle Eastern nations as well. Yes, obviously, you have to report it to IRS every year. And as we had previously discussed, in order for you to report it, the value has to be a certain amount, which we will get that value, and also a detailed documentation from our accounting firm. The 1400 square yards land belongs to who, and is it part of 110 units which are given out? Absolutely. So basically, the 1422 square yards that we're talking about, it is a company asset. So it is co-owned by everybody. So the 27.5 crores of valuation that we have raised includes the land, building, the interiors, to the last possible thing, from spoons and forks and everything is accounted for this 27.5 crores. So yes, it belongs to the 110 units. So each shareholder here will also get a UDS, right? So undivided share of that particular land. Did you factor in the future rupee devaluation in the ROI calculations? So again, so we had mentioned this at the beginning. So this is INR to INR. So you'll be investing in INR, and then you'll be taking the returns in INR. So hence, the rupee devaluation is something that will be done outside the scope of this current project. But again, the conventional wisdom is where the asset appreciation would be much higher than the devaluation of the rupee. So that's the hedging bet.
Can I ask one question, Varda? Previous related one.
Please.
So what is your investment for 22 years? 10% means 11 shares you guys are investing in this one?
110 is basically, it will come out to 9 shares. So 10%, right? Close to 11 shares. Yeah. So basically, so all equity is our investment. So 25 lakhs multiplied by 11 shares. Yes.
We have already put in the money. Basically, we have
already have
all the approvals, land, for lemon tree, we have payments. All these have been done through our equity only.
And also,
what about
the reserve funds in our promoter company?
Yeah.
So what about is there any management fee on top of that for maintaining this property after lemongrass and everything?
Yeah, basically for the first for the construction period, there's no management fee for the first 2 years till we get the commercial operation. And after stabilization, after the commercial operation also, for 1 year, we have waived off the management fee because we wanted to stabilize the operations to 75% occupancy level, then only charge a management fee. So that we are not charging on terms of the asset value. We are only charging on terms of the gross revenue. We are not like other companies charge 1% of the asset value, but we are not charging that. On terms of gross revenue, 2% gross revenue we are charging per year from the third year, basically after completion of the third year.
So in other words, it will be an incentive based for the first year until the hotel gets stabilized. We are not going to take any management fees. So post that one, we would like to maintain that 8% dividends as a base case, and then on top of it, we will take our management fees.
So 2%, remaining 98% goes to investors, right?
Yes.
98% of the The gross
Gro-
operation. Yes.
Gross operation, right? Yeah.
Correct.
Okay. So 8% means, if you are, I'm depositing 25 lakhs into the postal something where, 9% we are getting the interest, 9 to 10%. So what is the main, to get investors? What is the, motto in this one? I didn't understand. You are giving only 8% dividends, right?
It should be considered as two-way process, right? So you are investing in the property, right? So dividends is just one part of it. So 8% dividends. So basically in your postal returns, you are only getting that 8%, and there is no appreciation for the cash. But whereas here there is appreciation potential. And again, the 8% is a base case scenario that we have taken, right? So the upside potential could be much more than that one. Because it's not a rental yield, it's a dividend yield, right? So as and when the asset is performing well, it could go 14% or beyond also. But more than that, in the next 2 years itself, your 25 lakh investment, we are very much confident that it would go to 32 to 35 crores, right? So 27.5 crores of asset being valued at 35 crores is very much likely scenario. So an upside of 7 crores in the span of 2 years, right? So that capital appreciation is what we would have to look for. The overall IRR, internal rate of return, again, it's calculated for around 4 years. We are looking around 18 to 20%. So what it means is you're doubling down your value of investments in next 5 years. So that's the scenario that we should be considering in the property, in the real estate investment.
I'll just add a little to that. Basically, if you're seeing 8%, say if you're putting an FD or a postal thing also, like 8% you're seeing, but after inflation of 5 to 6%, your net returns are around 3%. But if you see here, you're getting a 8 to 14% spread is there on the dividend side, as well as your property will appreciate a minimum of 5 to 6% on inflation itself every year. So your inflation is getting taken care of and your net return is beyond 8%. Basically, that is what we are trying to build in this kind of fractional investment properties. Do get that value. Basically, that is the value addition of this kind of fractional investment properties rather than an FD or a financial instrument.
Okay.
Yeah.
Next question, can you confirm once again, like when we can start receiving the returns? Will the holding period of 2 years or it can go beyond 2 years? So the first return that you could expect is January 2027, right? So again, the operations will begin as per our estimation. Again, it's not the estimation between Yashwant and I, right? So it's since we have made a commitment with Lemon Tree, right? So there there are some certain standards that we would have to follow, right? So as per that, the operation should start in October of 2026, right? So October 2026 to December 2026, that will be the first quarter of operations, and then the dividends will be received in the January 2027.
So are you, for 2 years is enough for the construction?
Yeah, I mean, because it's a 30,000 square feet hotel, we are taking care of the construction part, and 2 years is realistic. I mean, to complete that project.
Is expenditure visible to shareholders? If expenditure is lesser than expected 50% in a year, then remaining amount will be distributed to shareholders, will be distributed.
Hey, Vardha, can you answer the second question as well, like the holding period?
The holding period, we are fixing it to 2 years. We are not going to increase that holding period as.
That means you will do like sell the property or liquidate.
No. I mean, that is for the individual investors to take a call. We are not going to sell the property in 2 years. That is individual investor if he wants to exit the property. Till the 75% of the people agree, I mean, the quorum of 75% agree to sell the property, we are not going to take any decision on behalf of the investors. It will be a collective decision because it will be co-ownership. All you guys are co-owners along with us. So we own 10%, but remaining 90% is you guys. So everyone, 75% of people should agree. Then only we'll be availing one of the exit options.
So investors can stay as long as
they want.
Okay.
There's no restriction on this. Holding period is only to maximize their interest. That's it.
Got it. And based on the performance, we will be getting quarterly dividends.
Yes, absolutely.
Got it. So the longer we hold, the better returns, I guess. Got it.
Because in Indian real estate, every 5 to 10 years,
Yeah.
you double your prices.
For the next question, the expenditure, since this is a private limited company, it is the norm that we would have to share all the details. Again, all the details will be certified, and it will be coming from the accountant's office at your disposal. So to the last rupee possible, everything will be accounted and will be shared with the shareholders.
Yeah, definitely. I mean, 50% we have taken as per the right now the estimation given by Lemon Tree. If it's below 50%, definitely if you get a better profit, definitely everything will be passed on to you to the investors, because our idea here at 22 yards is to maximize the return to the investors. It will be transparently shared, whatever the cost that we have incurred that year and what is the net profit that we have got. And then only we'll be taking this 2% fee or everything as based on the performance. So we need not worry about it. That's why we have chosen Lemon Tree also, because the dashboard that they're giving and the projections that they're giving are very clear. So in that way, the revenue side and as well as the expenditure side, both the things are being taken care of in a very transparent way.
And it's also responsibility of the accounting firm to declare that one.
Yes.
So what is the mitigation plan if there is crisis like COVID in the future? There is no mitigation plan as such, if such a pandemic happens. But however, the positive side of that one is, we will not be bleeding on this asset, right? So if we have taken debt on this particular one, so basically, if you have gone to the bank and raised there, then we are obligated to pay the interests, right? So here, since it's all equity, 100% is owned, we will not have that to bleed money, except there could be situations where we need to shell out some money to maintenance of the property, but otherwise there is no loss per se, or rather than calling it as loss, there is no bleeding. So but yeah, unlikely situation like that, nobody can escape.
But there's a small part of the question we missed. There's day-to-day operations of 2% fee is a part of the expenditure. Basically, basically what happens is it's part of the expenditure only. After for the third year, basically we have to manage your accounts. We have to manage the accounts with even Lemon Tree and distribute all these incomes. So we are charging that as a cost that we need to take care of our team members who will be sitting there and getting things done. So we are charging that cost. That's it. Yeah. And Black Swan events, COVID is the recent one, but definitely we should have a plan B. We'll think of those things. Right now, we have not planned for any Black Swan event, but in mitigation plan, we'll be planning something else.
So one more question on the same line, right? Now, if you are so certain that you are going to stay with the timelines, which is well and good, but we are talking about India, right? I mean, not only in India, even in US, they may be missing those timelines.
Yeah.
So, what kind of a control you envision putting in place to ensure that if you are certain that it will be completed in 2 years, it has to be 2 years, right? If it's not, what would be the plan B?
So basically what we have put right now is we have put some controls on the subcontractors that we are hiring for this project. Basically, we have, if there is an inordinate delay from their side to deploy the people or to do the process. So we are having some LD clauses on them. So we'll be charging an LD, like a penalty on them. So they'll be performing as per the timelines that they've committed. So in a macro level, if there is any other situation that is coming up, that we are trying to take care, we have kept some buffer of 3 months for that. So if any approval or any last minute thing like giving an approval for OC, like compliance, government has to give us a compliance. Nagarapalika over here is like a GHMC. So they have to give us an NOC that you can start operations. If those kind of things happen, we have put a buffer of 1 month for that. Those kind of things also. We are taken care of things and people over there, but still things can change over time in the next 2 years. So definitely we have kept some buffer as well as penalty clauses also.
And also the cost escalations, right? Have you factored that in?
Yes, we have factored that in. Yeah. For the next 2 years, we have factored that in.
So it's already factored, whatever percent that is.
Yeah.
So
In the
therefore,
contract, whatever
no
we give
new.
to contractors, the inflation is factored for the cost escalations. We are giving fixed contracts based on the numbers, quantities.
So there will not be any new request for additional funds
Yes.
or adding more shares to the.
Yes,
You know.
that is, I mean, that's because it's a first project. We are also taking it as a prestigious thing. We don't want to come back to the investors and say that, I mean, we have missed out on something. So definitely we are taking care because this process has started 1 year back. So we have been looking at different locations like Goa, Shirdi, and all these places. The best value creation happens in Shirdi because of the land rates and the appreciation that's happening over there. So we have taken care of all these numbers also, right, from value creation to the expenditure that's going to happen, and kept some buffers and in terms of time and cost also to take care of these things.
And
So
also,
let's say in the contingency, if you have to reach out, what have you thought about it? Would you reach to the same first class of investors or open a second round for a new class of investors?
Definitely, the first right of refusal should be with the first class investors itself. Any first right of refusal first will be with you guys all.
Okay, got it.
so this is also backed by the experience. So Yashwant has been in the construction industry for the past 6 years, and he has built over 52 buildings here. So all that measures has been taken place. So for anybody who is in Hyderabad, they can, we are happy to take you over to some of the buildings we have
Few of the buildings.
constructed. So does NRIs or their family members need to travel to Shirdi or any sort of paperwork?
I think.
So basically for
Signing up.
registration.
Yeah.
No. So registration, no. So that will be taken care by us. So none of the investors are required to come to Shirdi for registration.
And all the process we are trying to do it digitally only, so that you guys can get the shares allocation through digital platforms itself. 20 Ads has done a similar fractional investment project earlier in India or other cities. If yes, which are those and how can those returns? Can you share your learnings and things that you have to be cautious about as investors? In India, we have not done it. This is the first project for in fractional investment. As previously, because I stated also, we have done construction projects, real estate projects in India, but not fractional investment project. But Vikas and his father has a very good experience of doing many projects, around 15 to 16 projects in USA. Vikas will add more to this on their experience and the background.
So we do have experience, raising funds. So we have purchased quite a number of properties in Central Ohio and also 4 other different states. So some, I think, that we also have few of our investors here, but otherwise, my father is also has joined the call. We can share some of the details of the properties that we have done. So to sum it up, yes, not in India, but we do have a very good experience raising funds and then distributing dividends, doing things in a fractional capacity. Yes. So basically, it's a combination of that experience that we have gained in US and versus the construction experience that Yashwant has here in India. So this is the collaboration effort.
Yeah. The learnings that we had was when we are doing this research, because we don't want to take a one-time payment. Basically, people are taking one-time payments and promising something that other things, but that cannot be delivered. So that's why we have done a construction-linked payment plan. So it will be a clear process. You'll be knowing what is happening at the site, and then only you're paying according to that progress. So that is where the major learnings have been. So not to take the investor money and do other things. We take it as per the need and only do it as for this project, and make sure that it's accounted for.
Yashwant, you constructed in North India or South India?
South India, sir. AP and Telangana primarily we have worked. AP Telangana.
Because South India is different and North India is different, entirely different for especially for the construction.
Yes.
Because of the labor cost and so many problems are getting over there. That's what. Are you sure you are going to compete in 2 years?
Yeah, I mean, right now we have spoke to subcontractors over there. We are content that we can get people. I mean, if we can mobilize people also from other locations also. Right now also in Hyderabad, most of the labor that we get is from the north. We get people from outside and we get them to do the things. All these like civil works. If you take shuttering, most of the people are from UP or Bengal, these areas from the north, and even from plastering and other works also, brickwork also, we get more people from Andhra or other people from North India only. So these
labor getting is different, but we are working on in northern states.
I'll get to that point also. Basically, what we have done over there is we have spoken to local people, leaders also, and the permissions part also has been taken care. First part is permissions. That part is also being taken care. And project management wise, we have done projects in the remotest locations where transmission lines and these kind of projects happen in very remote locations. So in 50-60 locations at one point in 3 months. So we have taken, we have handled projects of that kind of complexity. So that with MNC clients. So we have that experience. We have taken those risks also into account, that what are the slippages that can come, from where we need to mobilize what kind of people. So any other external factors like local people pressures or all these things also we have factored in. So we are confident that it can be delivered until and unless there is any macro situation change or any other untoward incident. We are definitely confident that we can deliver in 2 years. Sorry.
Okay, is there any time shares for the investors?
At this moment, we have not given time shares, but we have given a 10% outright discount for investor referrals as well as for investors also, and any time of the year. Because right now we didn't want to eat into the revenue of the investors by giving time share. So we put once the revenue stabilizes, we can all take a call together if we want to have timeshare. But right now it is 10% off on any day. If you go to the hotel or if you send someone to the hotel, it will be given as a referral fee. 10% off.
10% off to the friends and family at any given point of time.
So if the project is, sorry, go ahead.
We wanted to maximize the revenue for the investors. That's why we have not put these perks as of now.
So if in any case the project is not going to complete or maybe going to progress, so who is the responsible person?
Yeah, both of us. Here, both of us are going to be the responsible people because we are the promoters of the company. So definitely it will be both of us.
I think you shared the payment, investor payment schedule somewhere, right? Where you have 4 stages. That's what will be followed, right?
Yes.
For investors to put in the money.
Yes, absolutely.
So also at any given point of time, right? So this is also a contingency method. So for the first 12.5 lakhs, right? So we are securing the asset over there. So that asset is there for the team, for the company, right? So then next schedule of payment, we are doing the slab work and brickwork, right? So God forbid, again, if the project stalls, whatever happens, right? So the asset is there, which, the
value is there.
Get out at any given point of time.
Yeah, we have built the value into the asset. Basically, we are taking as per the value that we are building into the asset only, so that this kind of things can be avoided if anything and unforeseen things happen also.
What about the soil condition of the property?
Right now, it's partially black cotton. We are doing a soil test. Based on that soil test only, we'll be taking the structural recommendations from Zaki Associates, a very reputed firm that has worked with us for the last 3 years, as well as for the big wigs like Aparna, even AIG hospitals, and they built around 50 hotels also. So we are taking their expertise in structural, MEP, and all the kitchen and electrical planning also.
No, it's okay. But what is the condition of the soil right
partial
now?
Black
Do you have any idea?
Yeah, partial black cotton soil. Partial black cotton soil.
Okay, but after digging the 20 feet or 30 feet, is going to get the water or something like that, because why I'm asking these questions, one of my friends are doing some car.
I think, partially, we can start answering that question, right? So now the original land was about 6,000 square meters plot, right? So it was about an acre and a half plot, so which is again subdivided into 4 parts. So the sellers actually do own a hotel right next to our property, right? So it's not of that a standard hotel, but again, it's a 33,000 square feet built on 10 guntas. So smaller than us. So ours is a 14 gunta property. So theirs is a 10 gunta property. They have built 33,000 with OC, and then G plus Cellar G plus 4, right, Ashwin?
Yeah, G plus
G plus 4. So again, abetting to that is this property, which is this 1422 square yards. So again, assuming that they have, so again, that building has been existing for past 10 years. So considering that one, the soil must be of a firm condition.
Yeah, on a technical side, after doing the soil classification only, we'll take the structural drawing. So even if there is any, it's a partial black cotton soil once we have investigated, but once we dig 10-15 feet and take the soil samples, at that time we'll know if there is any water seepage or anything, any other issue, and the foundation will be built according to that, and the building also will be built according to that. If there is a need for a raft foundation, we'll go for a raft foundation. If there is a need for a individual isolated footings, we'll go for that. So as of now, what we see is individual isolated footings will be required over there, and that can be done very easily.
That's true, but if there is a structural change, a raft foundation,
Yes.
the cost is going to increase, right?
Yeah, we
Then
have taken a
who is-
buffer over there for these kind of structural things. If any rock comes in also, if any rock is not anticipated, and this site at least, so we have taken that buffer into account.
So how much buffer? 10% or 20%?
No, not 10%. The structural cost is says around 700-800 rupees per square feet. We have taken a 70 rupees, 10% on that per increase of steel and concrete quantities. Does NRI or their family members need to? This is answered. Is 9,000 including the land? Do we know what is the cost of the land? Is there leasing versus buying option research done for this land? Yeah, the 9,000 rupees per square feet includes the buying cost of the land, including the furniture and everything of the building also, like interiors, as a cutlery, everything, the drapes and everything put together is the 9,000 rupees, 9,100 rupees per square feet. The land cost, all the costs are there, accumulating to 27.5 crores, including the construction buffers and even these things. The breakup that we can share on that. And leasing option, because we wanted capital appreciation, we have never considered that option. Leasing is not a good option because in India, legally also, it's very tough to fight things on a lease. So we wanted always to pass on the capital appreciation because it's a real estate asset. The capital appreciation every 5 to 10 years, you'll be developing your amount in anywhere in India. So why we want to lease it? So we wanted to go for a buying option only.
Then the next question is rupees 25 lakhs as initial payment starting January 2027. How much in rupees will be credited as dividend to the NRO account, monthly or annually? So again, the 25 lakhs is again divided into 4-part payment, right? So which is spread in over a period of year. So the first initial payment is 12.5 lakhs, followed by 4, then 4 and 4.5, which will be paid until January 2026, right? So now, yes. So that 25 lakhs from January 2026, the dividends will start, you will receiving it from January 2027. Assuming the base case of 8%, it would be 2 lakhs per annum. But however, the dividends will be distributed on a quarterly basis. So assuming again, 8% as a base case, you can expect to receive 50,000. So minus the TDS of 2%, TDS of 10% on top of it. So you can expect to receive about 45,000 rupees into your NRO account. Again, as and when the returns are higher in a particular quarter, then you can also see a higher value. So overall, our estimation from a base case to the I would not say a best case, but base case to a very decent case is about 8 to 14%. So that would translate to 2 lakh rupees per annum to 3.5 lakh rupees per annum, again divided by the 4 quarters. So in some quarters, you could see a higher dividend amount, and in some quarters, you may see a lesser dividend amount.
Yeah, there's a question from SD. Is there any legal structure around the investors like an LLC or just a private limited in India?
Basically my question was like in US when we do, and I did with the Ramesh Garu, who's on the call as well, right? and we have LLC around in India, and that's how the distribution comes and everything, right?
Yeah.
So will there be LLC in US as well as private limited in India, or just private limited with the investors' name in it?
Got it.
It's private limited with investors name. So all the investors will be part of the private limited company. Like
So no
similar
LLC
to-
in US, basically, right? No LLC in US.
No LLC in US.
But
Okay,
yeah,
okay, I understood your point. Yeah, no LLC. So it would be a direct, that's why I said, it would be a rupee to rupee transaction.
Perfect. Right. Thank you so much.
Yeah. Also, what kind of safety measures are in place for any land fraud that we see in India? We have taken title reports, and even we'll be taking insurance also, because we have done due diligence, legal due diligence with 2 firms, and 1 more firm in Shirdi also. So all the opinions have come clear. Then only we have paid for the land. So that is being taken care, and building insurance and all fire safety, all this insurance also will be in place. Can we add a joint owner to a share? As of now, we are not giving that flexibility, but we'll talk to our auditor. Most probably it will be no, but we'll let you know.
It's an internal arrangement.
Yes. But on the share, maybe you can't add it.
Yeah. And also, I would advise you to talk to your auditing firms here in India. So there's also certain provisions given for if you have parents or relatives here, the TDS can be accommodated for that as well. The TDS of 10% can be sort of avoided there, given the age of the investor. But again, I would not like to go deep into that one. I'd advise talking to your accountant.
Yeah.
Okay. Yeah. Can we add as like nominee or power of attorney or anything like that?
Yes, you can do.
Yes, there are options. We can arrange a call with our auditor. He can explain more about it in an individual basis.
Yes.
Also, in 1400 square yards, what is the construction square feet area? Is it 30,000 square feet? Is it a rough estimate? Or 30,000 square feet is the estimate. Basically, 500 square feet here or there might be adding, because we are adding a couple of. We are right now we are planned for 2 lifts, but we are adding 1 more lift into the for services. So maybe we'll be increasing overall by another 500 square feet to 600 square feet maximum. There's a higher side estimate of 30,000 square feet as of now. So it will be, a cellar plus ground plus 5 building. So around 4,000 to 4,500 square feet. 4,500 square feet per floor will be the built up area. And each room is around 250 square feet, 240 to 250 square feet. Is the room sizes. I think we have pretty much answered all the questions. I think if there are any more questions also, we'll be happy to take it.
And also what we will be doing is we will be sharing this link with you.
The FAQs will be shared with you on a link shortly. And you need a DMAT account that will help you open. If you don't have one, we'll help you open. Our auditor will help you open with our banker.
I can see it.
Okay, so this is a platform that we have built, right? So here, when you scroll down, if you click onto that one, then you can, if you are interested in this property, then can certainly put some details over here, so that way our team will reach out to you. And we have put all the frequently asked questions in this particular platform itself. For this property, right? So we will share this link with you, and also all the frequently asked questions which we have recorded. We'll share those things in detail for you to take, to ensure that all your questions are addressed over there. And apart from that, we'll also share our numbers with you. So please feel free to ping us, and we're happy to address any questions.
Yeah,
I know you mentioned that a call with the auditor on a as needed basis, but I was wondering if it's possible to have that call with the group itself, so we all can listen in and ask the questions also.
Sure, we'll arrange for that. Maybe next
That'll be great,
next
yeah.
weekend or mid of this week, we'll try to arrange for that. So you can, I mean, individually also before that, if you guys have any questions, you can reach out to us. We'll connect you with our auditor. He was supposed to be on this call, but today being an early morning, he couldn't join. So, but we'll arrange for a call definitely in the next few days. Yeah.
Also, I have couple of questions.
Yeah, please.
So after building the construction, right, how much bank give the loan on this building? 27.5 crores, right? Maybe you can say 30 crores. What is any
as
idea?
we can't take loans on this. I mean, we don't want to take loans on this property because the quorum of 75% of the people should agree if we have to take a loan. We are not
No.
anticipating.
Just I'm asking how much. What is the percentage they are going to give?
Maybe, if you take, the appreciated value after construction will be around 35 crores is our anticipation. At least 65 to 70% of the value definitely will be at least close to 80% of the value will be given by a bank valuation at least minimum, because the land rates over there, private land rates and market land rates vary a lot. So that's why 80% valuation will come on a
Why?
value. So around
Why I'm
you can say
60 to 70%.
close to 75% also you can get, but it depends on the valuer and the banker also. 75% of the appreciated value of around 35 crores.
No. Why I'm asking this question is down the road after construction, maybe 2-3 years later,
Yeah.
you can take a loan and you can build another building also, right? Is there any plans like that?
Obviously, if all the 75% or more investors agree on that, definitely
Yes.
that is an
Right.
option. But we are not proposing as of now because these are options that will come only on a longer run of.
Hey, one question.
Yeah.
How will we know what is the value of our share at any point of time after the construction?
Yeah, we'll be giving a valuation report every 6 months through a private authorized valuer. So he'll be giving every half year, he'll be giving you a valuation report at which you can trade your share.
And that will be corresponding to the land appreciation value as well.
Yes,
Like
land
whatever the
and,
current rate is.
Yes, land and the operations and everything will be considered appreciations, and then he'll give you the value based on that.
So largely what happens for a commercial real estate asset is, the value of the property depends upon the income that is being generated by the property, right?
Right.
And also the brands that are associated with the property is where the valuation will increase. So the comparison would not be an apple to apple, where, even if you have a 30,000 square feet with a similar specification built across the street, if the returns on that particular property is less, the valuation would also go less. So once it gets operationalized, then you should consider this as a business. Hence, the valuer will come into play, and then they will make a proper assessment.
Because there will be a lot of tangibles and intangibles also, like branding, as Vikas has stated, and other things. So that will add to the value.
Does Lemon Tree own have their own hotels?
Yes.
Along with men.
Yeah.
Yes.
Okay.
They
Is there
have,
any will there be? Are you anticipating any future proposal from them to acquire this?
Maybe, if the occupancy is going above 75% or 80%, they might come up with it. But as of now, no proposal. Because they own the assets, like 40 odd hotels they own out of the 110. They own the largest in terms of rooms, 670 rooms hotel in India. It's by the brand Aureka by Lemon Tree in Andheri. We have been to the hotel also. They're maintaining an occupancy level of around 72% average in a 5-star in that category, 670 rooms. So that's why we were more confident. We have seen various properties of theirs. So that's why we were confident that Lemon Tree as a brand will be more apt for us to run this property.
Okay.
Also, one point that we would like to add, which we have forgot. So Lemon Tree has the association with the Indigo Airlines. So all their staff would stay put in Lemon Tree hotels if the hotel is present in a particular city, right? So as of now, there are no night landings in city, but in the years to come, if that night landing gets operationalized, then we will also have a captive crowd of about at least 3 to 4 rooms reserved for the staff itself.
Airlines.
Will there be any competition from Airbnb or vacation rentals?
Right now, Shirdi is a place of more devotional kind of a place. So Airbnb, there are few corporate guest houses or things like that, but Airbnb as such will not be much of a competition in Shirdi, because the infrastructure is still yet to be reached to a good level in Shirdi. like individual houses and all these infrastructure are not that great that people would want to go in safely and stay over there. Because see, major thing when you go there is safety and hygiene. That is primary for most of us. So when you go into a lemon tree, it's entirely different, and when you go into an Airbnb in India, it's entirely different.
And how affordable is the restaurant within this hotel?
Yeah, it'll be a pure veg restaurant, and it's Citrus by Lemon Tree. So it's their own brand. So they'll be charging breakfast around $5.99 is what they proposed to us. If they don't pay for the breakfast with the room, and the lunch also most probably a buffet around $6.99 is what they're proposing. $5.99 or $6.99 lunch buffet also, because they want to attract more crowd, outside crowd also to the restaurant.
So I have a question regarding the investors. The investors are India and US both together, or only for US?
No, both India and US. We have got a very good interest from Indian market also.
Yeah, India,
Okay.
US, also other countries also. So we have interest from UK. We also have a few people committed from Middle East and as well as Singapore.
We expect around 60-70% to be filled through Indian investors only, because a lot of demand is there from Indian investors. But I mean, it will be a mix from all international and Indian investors.
So overall, we are investing 25 lakhs. After second, third, 27 onwards, we are getting 2 lakhs, right? Per year.
No, that is, so basically that's a base case scenario.
Yes.
Base case.
Yeah, nobody can predict the future. It's just
We don't know.
it's just expected.
Those are the
Yeah.
projection you have. Those are
That
the
is the
projection.
projection is, I mean, so that's why, so basically, we are not taking that management fees for 1 year, because since we also own, perhaps ours would be the major stake in this company. So we wanted to ensure that there is a proper stability in place, and also we get to the occupancy level of 70-75%. Then we wanted to take the management fees. So we wanted to ensure at least 8% returns are given to the investors, and which we are very, very confident of.
Because this is based on the research and current happenings in Shirdi. I mean, future it might be even better also.
Okay.
This the question related to
Hello, friends.
Yeah.
Hello, friends. This is Ramesh Varda, father of Vikas, and I'm just listening to their webinar. And this is the very lucrative investment and the potential investment opportunity started in India now. So, as Vikas told, we are doing very well in the US now. So, most of the participants joined here are the investors of existing investors now. So you can ask them, or you can call me for any questions. Feel free to call me if you have any questions. Thank you all. And also, I just want to mention about the promoters. Yashwant and Vikas. They are well experienced and well qualified, and I guarantee you, they will do that professional management. So because I know about my son, and Yashwant is also well experienced, and their coordination is very good. And in the coming years, you can see more projects in the future. Thank you.
Thank you, Ramesh.
Thank you, Ramesh Garu.
What is the average like growth rate in Shirdi land appreciation, like last 10 years? Do you have any numbers?
Yeah. I mean, average has been around 8 to 10% on average. There has been one boom before COVID that basically we should not consider, but average is around 8 to 10%.
8 to 10% of growth rate. But however, as you mentioned, once it is declared as a district, the growth rate would be much higher than that.
Yeah. This road in Shirdi that we're talking is like the Jubilee, 36 of Hyderabad. Like it's the prime road of Shirdi that we have taken the property on.
Yeah, and it's close to temple as well, right?
Yeah, very
And
close.
you're talking about the facing.
Yeah.
Seems like a good one, because we are getting passive income. We will be along with the land appreciation.
Yes.
And also another thing is, so we have also taken the Vastu experts also to see the plot and all. So everybody have unanimously suggested to go with that particular plot, because it's very rare to find that northeast extension, and then the way that plot has been projected, they said it's very good for business. So
Customers might not worry about the facing, but definitely maybe buyers in the future probably. They will look into the posture,
Yeah.
right?
No, the plot orientation is also important for us to come up with
because as investors, we also have to make good returns. So definitely, we've taken
And
care of
also
these aspects
in the
also.
future, in the future when you're selling, people over there, they believe in that, right?
Yes,
So
yes,
that will-
definitely. I mean,
Exactly. I mean,
yeah.
if the buyers are corporate, do you think they will look into this? Of course, it's an added advantage. Not doubling this, but
yeah, most probably if it's a corporate, maybe they'll just go by the numbers and the occupancy rate.
right.
No, in fact, the see what happens here in India, there's a lot of belief system that goes in, which I'm also learning here in the past 1 year, because I've got completely acquainted with the US structure, but here, I see things a little different. So what has happened is, we had to take the executives from elementary. So they would also do the due diligence about the area, plot and everything. So they said the same thing. चलो भाई आपका तो बिजनेस अच्छा चलेगा क्योंकि ये प्लॉट का डायरेक्शन भी अच्छा है हमारा भी फायदा हो जाएगा right so things like that will also be taken into consideration so because they are the ones who will be running the business so again just a thought that is given to it which is not a consideration for investment per se the belief system that goes here
So this is the first project, right? By
India.
22 years.
Yeah.
First project for 20 years.
Okay. Thank you. Good presentation, Vardha, Vikas, and Yashwant.
Thank you, sir.
Thank you.
Thank you.
Great job, and thank you so much for answering all the questions. You're pretty good. I mean, you've done your due diligence and hard work you put in for last 1 year. Looks like so. Thank you so much.
Thank you.
Thank you. Yeah, I mean, all the documents we'll be putting, I mean, most of them which are can be shared, we'll be putting on the platform itself. So it'll be, once you have the login, if you log in, you'll be able to see the documents and other data also, updates also.
All right. Thank you everybody for taking time to listen to our presentation. Any other questions that you have, please feel free to put that in the chat or, you can reach out to us personally. We'll be happy to go over any questions, that were not answered in this call. And we also anticipate to have couple more webinar sessions, probably next week or maybe in the first week of January, we'll do that one. And we'll also share the investment details or basically the account details and all that stuff in the next couple days. Yeah. Thank you so much.
Registering on the platform will definitely help because there'll be a dashboard for your revenue that will be useful in the future, and all the construction update also will update there only. So registering on the platform as investors is definitely helpful. Yeah, thank you guys. I mean, it's been a pleasure to host you and basically explain about the property and take your questions also. Thanks a lot. And we look forward to talking to you individually and take this forward. Thank you.